10-year note yields moved lower midweek, today seeing a range of 440 all the way down to 424 before closing out the session at 432, right near the midpoint. A lot was crammed into today. It started early with this May CPI data that came in weaker than expected. That helped to push yields down to the lows of the day as we saw rate cut odds rise for September and beyond ahead of FOMC. But then came FOMC, and the headlines as well as the Fed share were less dovish than the CPI number that we had earlier in the morning implied, seeing yields move back higher up to 432, again closing down 8 basis points off the day, but well off those lows. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that volatility has been very choppy going back to May. We've seen some big moves higher and lower. While after today's key events, CPI and FOMC, we saw volatility moving lower as yields are moving lower. But again, it's more about the event passing and seeing yields moved combined help to push volatility lower, heading towards those May lows. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We will also get PPI, which may be an afterthought here after getting CPI today and hearing directly from the Fed and the Fed chair. Lastly, we'll get a 30-year auction, installment 3 of the 3, 10, and 30-year refunding that we have this week. And then we'll get back to listening to Fed speakers, something we haven't had on the calendar for quite some time since they've been in the blackout communication period ahead of June FOMC. So midweek and after CPI and after FOMC, yields end up the day lower, seeing them close at 432, down 8 basis points ahead of tomorrow's PPI claims and 30-year auction.